Good afternoon. How are we all doing? Afternoon, Church. First in today. Steve, Crump, David, afternoon. Monkey, Fletch, Harold, Callum, Mark, microphone working? Yep, good. Paul, Brian. Sorry, it wasn't working yesterday when I tested it, so just want to check. Morning, Virginia. Afternoon, even. What day is it? Meh, how we doing? Morning. Everybody says morning and afternoon. It's really confusing. All these different time zone things. Weird. How are we all doing? Afternoon. Thank you very much, David, for the $5. I got a new job offer, making 22k more a year. Good job. Wow. 22k more a year. That's a lot. Good man. And you're still in here. Even better. Have you accepted the job offer, though? That's the question. Afternoon, Brian. I've already said hello. Hello. Right. So going to trade the Open, New York Open this afternoon. Too many terminals open, that one. So I was going to wait and see whether or not I was going to trade it, actually, this afternoon, because obviously we've had the PPI figures come out, which we'll go through in a minute. So I just wanted to see what the volatility was like off the back of it. And we haven't had a great amount of movement. So I'm going to trade it because we're nowhere near ADR, as you can see. ADR is absolutely miles away. So there's plenty of room for movement. We just got a quick spike and retracement, which was tiny. So we moved basically 72 pips on a 274 ADR, so it's fine. I did accept, and I will never leave this channel. That's brilliant, David. How do you do a job and come here? Afternoon, Harold. I've already said afternoon. You're just doing a celebration for David, I presume. DSKS, welcome. Mumo, how we doing? Sally has been a bit crazy. Well, yeah, just talking basically in Telegram today. It's good. People actually conversing. I'm not having a go at anybody in Telegram. I'm just saying in Telegram, when I talk about people that talk about general trading stuff, it's not for that. It's basically for support. That's really why I set it up. There's lots of general trading channels out there. You can go and chat about whatever you like, but just try and keep my channel as straight as it can be. Otherwise, you just end up going off on tangents all the time. As you know, I like to go off on a tangent. Always. Afternoon, Bogdan. Rafiq, I've gone off on a tangent now because I was talking about the New York Open. It's 20 past. We've got 10 minutes to open. So we had some really good movement this morning, DAX and FTSE. I woke up late this morning and I didn't get a chance to trade the Open. And it's probably one of the best breaks we've had with the SIH or opening range breakout strategy for quite a while. It went straight down to ADR, literally. Straight down to ADR. So, yeah. No, the FTSE didn't, but DAX was amazing this morning. So, fingers crossed, we get the same price action on the US indices this afternoon. We'll see where we go. So, just quickly covering news before we look at that. So, yesterday, obviously, was FOMC. So, we had the CPI numbers coming out as negative yesterday, which obviously had quite a big impact. Then we had the FOMC statement, and obviously the rate came out at 5.5, which we knew was going to happen. We knew that wasn't going to change. Then we had this press conference yesterday. So basically, as I said yesterday morning, or I said in Discord, or I said somewhere, I can't remember where it was because I talk all over the place. But I said I wouldn't be surprised if we just undo everything. So yesterday, if you look at a lot of the movement that we had, that's the CPI numbers. That is the reaction from the market to what happened afterwards in FOMC. So it's a complete A-shaped recovery on the move. So the CPI numbers, it was absolutely really good. I got out of this yesterday. So as I was watching, I was sitting on my sofa last night. So I got out of everything I needed to on the US dollar drop, which was fantastic. EA flipped me the other way on a lot of US pairs. And as you can probably see on this one, can't actually see very well at all, actually. But I got in automatically with the EA. And I just, this candle here was the FOMC happening, and it was all over the place. And I was just worried about getting this flying and continuing. So I decided to get out of it. And as I did, it obviously all collapsed. So I could have made a lot more yesterday than I did. I made 3.3% yesterday, so it's really good. It's brought the month back to 2.65 loss, which is fantastic because I was down at 9% at the beginning of the month. The first 2 weeks of the month were awful. But that's all flipped and turned now. I had an opportunity to take $800 off the euro pound today, which I'm very annoyed about. Yeah, we were up here. I was about $800 up on it, and it's undecided, but I'm still not too worried about direction on this because we still haven't done the gap fill, and I'm pretty sure we're going to get the gap fill done. So I'm holding this. I'm going to try and hold it to 2%, so I can get the month back to break even, and then hopefully the last 2 weeks of the month are going to fly. So basically, the upshot of FOMC yesterday was CPI numbers came down. Fantastic. A little bit more than we were expecting. So we were expecting the core CPI, which is the main measurement, to be a 0.3, no change. We actually got a 0.2. We're expecting the annual to be a 3.4, no change. We actually got a 3.3. So obviously the market went, oh my God, and sold the crap out of the US dollar, not realizing it really doesn't make any difference because in the press conference, as I said yesterday, Powell came out and said what I thought he would say, that's not good enough. So obviously the market went, oh, and undid the whole move. So we got the whipsaw that I spoke about yesterday on all of the US dollar pairs, but we haven't got the movement yet. So the upshot of the statement, where's Powell gone? There he is. So far this year, we have not got greater confidence on inflation in order to cut. So no change there. We know it's not going down fast enough. We need to see more good data to bolster confidence on inflation, i.e. we will be data driven and watch the numbers. Again, CPI, PPI, absolutely critical. That's what we're interested in. Economic stuff. The other thing, obviously, he said, which again he said last time, was if the jobs are to weaken unexpectedly, we'll be ready to respond. So if that job market suddenly flies up, they will drop interest rates. So again, jobs, which is why we pay attention to non-farm payroll, or rather we pay attention to the unemployment rate. This one here. So the unemployment rate, this is what he's talking about there. That went up. Yeah, which is, again, bad. Yeah, so what he's saying is if this continues to go up, we might have to do something about it in regards to cutting rates. So this is why on, obviously, the fundamentals, we track all of this. We track inflation, we track GDP, and we track unemployment. These are the three key drivers that focus on that. That is adjusted and makes currencies go up and down. So basically, nothing said yesterday at all that helps anybody. Unexpected weakness in the labour market could also call for a response. So the market has factored in a September drop now. Can't remember where I saw that, but it's now September as the forecast for the rates to come down. So we are forecasting one, I think it was the dot plot actually. Yeah, so we're now looking at one rate cut of 0.25% probably in September. So the dot plot now showing we will be sitting at somewhere between 5.5, which is where we are at the moment, and 4.75, probably 5.25, which is the most likely. Yeah, bang in the middle. So again, there is no reason for any weakness in the US dollar over the next 2 to 3 months. There is no reason for any strength in the US dollar over the next 2 to 3 months either. So we are still sitting neutral. Market's opening in 2 minutes. The other thing we had was Macklem speaking. Nothing came out of that. We had the unemployment rate for the Aussies. That came out as forecast. So if you look at the Aussie pairs, really nothing happened on the Australian. We had some whipsawing, but nothing happening basically on the Aussie dollar either. So no news from the Aussies. PPI has come out lower than expected. Core came out at a 0 off of a 0.3. So looking at the US dollar again today, market weakened on that, but we're nowhere near ADR. So that figure gave us a 37 pip drop, half an ADR. Not a lot, nothing. Yeah, so the market basically is just waiting for the next CPI. So what we got told yesterday was, holy crap, no, it's not. Wait until next month. Still in the same boat as we've been in for the last 12 months. So it doesn't help anybody in any way, shape or form. So that's the upshot of the news yesterday. That's it for news today until Macklem speaks again later. We've also got Yellen speaking this afternoon, and we've got 30-year bond auctions, but none of that really should have any impact. Macklem spoke yesterday, nothing. No reason why anything would be said by Macklem today to change anything. Tomorrow morning, Bank of Japan interest rate. So there's no more news for the rest of the day. Markets open, short on the Dow. No pre-market trade on the NASDAQ. Why is that showing a range size of 0? Something's gone wrong there. What's gone wrong there? Bear with me a sec. Zero divide? Oh. TP hit on the Dow. I know why that is. I've just switched accounts. I've just transferred my money out into another account, and I haven't got 10 days data in here. Have now. So it couldn't calculate ADR. Annoying. Never mind. So range on the NAS is 27. Is under minimum anyway, so it probably wouldn't have traded. So Dow Jones straight down 1R. Nice, quick, clean break. Pushing nicely. S&P is about to drop. Somebody asked in the Telegram group earlier today, Ben, don't know if you're in here, about the Russell 2000. I can't remember which index it is, but the Russell is very, very, very closely correlated to one of these three. I think it's the Dow. If you look at the Russell 2000, I haven't got the Russell actually on this account. I was just going to look at it. But if you look at the Russell, it's really closely correlated, I think, to the Dow Jones. Might be the S&P, I'm not sure. But there's no point in trading the Russell because the movement and the volume in the Russell is way lower than these three. So what you're doing is you're trading something with less liquidity, less chance to break at the open. So it doesn't make sense to trade it. But I used to trade the Russell on futures and I stopped because I was over leveraging myself with another currency and another instrument. I can't remember which it is. I'm pretty sure it's the Dow. Because obviously these two guys are, although now they're not, but these two guys used to be heavily correlated. You can see the correlation between these two is very different now. These two have really uncoupled themselves over the last year. But correlation does change. So, afternoon, everybody else. Hubson, hello to. Market maker. Quickly overslept. Break all the way to ADR. Yeah, of course. Yeah. It's because the cameras weren't on here, so they couldn't see me. They assumed I wasn't trading, so they just did what they wanted to do because they weren't watching me. Typical, isn't it? More likes, everybody. Yeah. Everybody hit the thumbs, please. I am 2.3K this month so far, but slow. Good man, Harold. Afternoon, Chucks. Amy. Russell, mostly correlated to the S&P, is it? But not as close as the S&P to the NASDAQ. Yeah, I knew it was one of them. I couldn't remember which. It's not as, when in futures, it's not as liquid by a long shot. Yeah, the Russell 2000 is nowhere near as liquid. And the problem with it is, and the reason it's not as liquid is because there's 2,000 stocks in it. So there is 2,000 cogs that can move it. So when you get 500 cogs going one direction and 300 cogs going the other direction, it doesn't really do much. It will move in the same direction as the S&P 500 because those 2,000 cogs are feeding the S&P 500, which is why the NASDAQ and the S&P are correlated. If something happens in Apple, for example, there will be a load of S&P businesses that supply Apple affected by Apple's stock price. If Apple's stock price goes up, the suppliers to Apple's stock price goes up. Because obviously if Apple is doing that, everybody that supplies Apple is going to get more orders. And the Russell is very much the same. And obviously if it is the S&P that it's correlated to, that's why, because those companies feed the S&P companies. So it's all linked. Everything's interlinked in everything basically in trading. But yeah, so short on the S&P now as well. No trade on the NASDAQ. That's too tiny, that range. So come back to that in a minute. So FX wise today, there's no go euro pound. Get back up there, thank you, and get that gap done. Can we? Not today because it's 150 ADR. You can try, but probably not today. So as you can see, there's no ADRs today. Market, obviously, we had a big ADR day yesterday. Not particularly big, but there's nothing to look at today so far. ADR is still very contracted. Market's still very contracted. Everything's going sideways still. And now the US has come out and said they're going in sideways for the next couple of months. What we're going to do. So there's nothing to look at from an ADR perspective today. I did a full analysis of all FX pairs yesterday as well, so I'm not going to go through that. There are quite a few weeklies. So we're on Thursday. So weeklies are in play. So Aussie dollar CAD is extended to the upside, but if we go and put a line on for Monday, where are we? Thursday, Wednesday, Tuesday, Monday. Yeah, after non-farm payroll, obviously. So that is your weekly range hit. We did hit that yesterday, and obviously it's already played out, so you'd be out of that one probably already. Aussie US, I suspect the same story on all of these. Yeah, so you can see on here on this one. So short there, longed it there, shorted it there, out. Yeah, it's absolutely beautiful, the US dollar at the moment. Long be it, sideways. If you don't change your interest rates for the next 12 months, carry on. I will just keep making money out of you, US dollar. You're lovely. But yeah, so I got out of the Aussie US today that I got into yesterday. Euro odd. So that extension has already played out. These have all played out. Look, so there's your weekly range. There's your bounce already. Euro New Zealand is still extended, I think. Yeah, that's done 125. So a lot of these euros, obviously, we've still got gap fills from Friday's non-farm payroll. Obviously, this is where the European Parliament was, the French Parliament was having problems. So we gapped down on the euro. I still think there's a good chance we'll get all these gaps filled on these euro pairs. So potentially You've got a reversal starting there. Euro US, that one's extended to the upside, and obviously you've had that already. What else we got? Pound US, same story in all these. It's all US, look. So A-shaped recovery on that. New Zealand dollar CAD. Still in that one. Need to set a target. So short taken yesterday. Got out the long 2 days ago. Short triggered yesterday. Almost had an exit on that today, but not quite. So it's not really gone anywhere today. But looking for it to come back and retest. New Zealand dollar still fairly strong at the moment, though. That's a 125 extension on the weekly, and New Zealand dollar US dollar. Again, that's the one I got out of yesterday. Basically, I got a little bit overexposed on US. Obviously, the trouble with using an EA is the EA does what it's told, and it obviously got into a hell of a lot of trades on the US dollar yesterday because of that spike. So that's the reason I was closing some of these out, because I had 4 US dollar exposures on with the EA, and I was watching like a hawk while non-farm payroll, while FOMC was being announced and they were going through the statement, and it was all over the place. And I was just thinking, if that US dollar collapses off the back of this, I do not want 4 exposures. So I cut 2 of the exposures pretty much at break even. Just very, very small profits, basically, tiny little. Just to get the exposure down in case it was the wrong choice, because obviously it dropped 50%. So if I'd have known that, I wouldn't have done it. So there's your weeklies. Monthlies, nothing's hit its monthly ranges yet. So it's been a quiet month so far for most pairs, so nothing's really gone there. RSIs, you haven't got anything. Yens extended. So we will look at the yens. Might as well do that now. Let me just quickly go over to the indices and see what's going on. S&P's pulled back inside the opening range. Nasdaq's broken out long. Propulsion gap formed on the Dow. Particularly exciting, is it? But it does look like it's going to break short the Dow. So yeah, Aussie dollar yen extended on the 4 hour to the upside. We're back up at the weekly high from last week, which is basically the open. And then we've got that double monthly high coming up as well, which is basically the all-time high against the yen. So, which is the intervention level, obviously, which we tapped into and rejected. So again, we are coming back up here on the yen. Yesterday, the US dollar yen obviously helped out the yen situation, but they've undone the whole lot because it was just a spike because of numbers, and then they realized the numbers have got no impact. So we're back to where we were. So this could go anywhere. So all of these yen pairs, if you're in any yen at the moment, obviously tomorrow morning, you have got the Japanese policy rate coming out. No idea. No one's got any idea what they're doing. We've got no clue whatsoever. So this could come out at 0.1, could come out at a positive, could come out a negative. They could go 0.25%. We haven't got a clue. So something will happen tomorrow morning, whether it be that and stay where we are, or whether the market collapses 200 ADR before I get up. I have no clue. So we'll wait and see what happens with that tomorrow morning. The monetary policy statement will come out, which will lay out some forward guidance. But the press conference, from memory, press conference tends to be somewhere around about 4 o'clock, 4:30 a.m. UK time. So that's tomorrow morning. Need to be aware of that. This is where Ueda and Suzuki will be questioned. I think it's Ueda that takes it, about what is going to happen forward with monetary policy moving forward. So there could be a very, very big move on the yen tomorrow morning. We need to be aware. This is the first interest rate change we've had since the intervention attempt, which failed. So it's critical. We know what the hell they're going to do next. So I'm hoping tomorrow they'll give us some idea as to what their plans are. And if they do give us some idea, I might start getting back into the yen. At the moment, until I know what they're doing with interest rates, I don't want to trade it because I've no idea what the bias should be, really. Obviously, it's long. We know that, but that's because of interest rates not being changed. Tomorrow morning is when we're going to find out. So if you're in any yen and you've got any profit, I would probably take it off the board. We've got pairs which have broken out beyond the intervention level now. So we know this yen is still very, very, very weak. Pound yen's tipped out the top. New Zealand yen has screamed off out the highs. Aussie yen is testing the highs at the moment. And US dollar yen, as we know, couldn't get past the second intervention level, but that's because this US dollar's not had any strength at all. It's just neutral. So be careful tomorrow morning. If you've got any yen on, I will decide what to do tomorrow about the yen once I've got that rate, and I'll maybe start getting into 1 or 2 yen pairs, but I probably won't trade them all, and I'll probably trade them just manually, basically. Support and resistance and RSI extensions. I probably won't use the EA to get into the trades. I'll probably just take manual trades when I see them and they look good. But I can't figure out what to do with it, because if you long it, you're going to earn money on swap. But if you long it, you're going against what the Japanese need to do. If you go short, you're going with what the Japanese need to do, but you're going to end up paying hideous swap fees. And if the Japanese don't do anything, you're just going to hemorrhage cash. So it's just very, very difficult to trade at the moment, because the whole world wants to do that. The Japanese want to do that. The US want to do that. But the US can't do that because they cannot bring down their interest rates. The Japanese can't intervene. It failed. They probably haven't got any more powder left to do that. They've stopped buying bonds overseas, or reduced bond purchases overseas, which reduces their ammunition to be able to do that. And the rest of the market is pushing against them. It's just an impossible situation. So it could do absolutely anything. So like a powder keg at the moment, this thing, it could go either way, and it could go either way with an extreme force. So just be careful if you're position trading it. Stop loss strategies aren't really a problem. So if you do think the Japanese are going to do something with interest rates, yeah, get in today, stick a stop at 150 ADR or 200 ADR, and then hold it. But bear in mind, you're going to pay a hell of a lot of swap on it. So if you think the Japanese can't do anything, hit long, stick 225 ADR on it, which takes you down to the 72, and hold it. At least you're going to get positive swaps. But I just don't know what they're going to do, or what the market thinks they're going to do. So we'll see. So New Zealand dollar yen is your only other 4-hour RSI extension. So both of these extended. I'd like to see them above the 80s before I get interested in it. It's got to be very extended, and you're only going to get a small pullback on it. Potentially, this thing's just going to do flag, push, flag, push. So, be careful. But there's no other RSIs at the moment. Every RSI we had yesterday is undone, which was US dollar. So it's all done. So yeah, just holding all these positions. Come on, euro, pound. Hurry up. I just want to get out of this. I remember I got stuck in this last time. I just get stuck in this. This is why I just want it to get this gap fill done so I can get out and just short it. Because I just get stuck in this thing. I've been stuck in it twice now. I can't zoom out any further, but I was stuck in this for ages, stuck in it for over a month, 6 weeks. I was stuck in that for 2 weeks. I just don't want to get stuck in it again. I just want it to go and hit my target so I can get out. I just don't want to trade it. 30 ADR, it just takes forever. It's awful. So yeah, so if there's any FX pairs you want to look at, let me know. There's nothing else really to look at or analyze today on that side of things. TP2 hit on the Dow, 3R straight down. Thank you very much. S&P breaking down now as well. So going to hit target on that one, hopefully. Itchy nose. we've got this S&P basically, as you can see. Sorry, I've got really itchy nose for some reason. This microphone thing. So S&P, as you can see, we've got a very large propulsion gap formed yesterday, which didn't get filled. The NASDAQ broke in a slightly different way. We got a big buy at the end of the day on the NAS. So there's a big propulsion gap to the downside. So there's good downside targets on both of these. But obviously they are very bullish at the minute. Obviously when the US dollar drops, the stock market pops. So if that US dollar is going to continue to drop, there's a good chance this will all get held up today. So we'll wait and see what happens. But Dow, very nice and easy today. Morning, Hamza. Last time yen increased interest rates, it managed to weaken further. Yeah, exactly. So the last interest rate rise, if you look at the US dollar yen, last interest rate change that we had was April 26th. There, wasn't it? Yeah, it's just before the it's because it was before the intervention, wasn't it? So that was them changing the interest rates in a positive way, which should have done that. It completely collapsed, which is why that intervention came. They couldn't take any more. You have to ask the question, who did this? Yeah. Was this forced by the Japanese so that they could do that? It's, there's a lot going on under the hood, basically, with this yen, isn't there? So that is not the normal reaction to a positive interest rate change. But, we'll see. If it happens again, we will obviously break out of the intervention, the second intervention high, which is there. Yeah. So that's 100 ADR from where we are right now. So if we sit around up here, tomorrow 100 ADR is going to be up there. It could easily do that, couldn't it? If it does do that, have they got the powder to do that? It's just unknown. It's just, you are literally gambling. If you're trading the yen, you are literally gambling at the moment, which is absolutely fine. You can make a hell of a lot of money gambling. But obviously, if you can also lose a lot. So if you're position trading, I would, if you've got shorts on or longs on, whatever you've got on, I would have at least some stops on some of them. If you've got 3 positions on or 4 positions on, get 2 of them stopped out if it goes the wrong way. Because if it goes the wrong way and it continues to go the wrong way, it could be an absolute account hemorrhager. Ask me about it. I know all about it. Yeah, it can hurt. Yeah, this was a 10% loss. That was an 11% gain. But that was a gamble. Nothing wrong with gambling. Just as long as you understand it's not a consistent way of making money. Great news, David. Yeah. How's my FTMO going? Not too bad. Not too good. Not really had any opportunities. I'm up 2.06, break even at the moment. The only 2 signals I've got at the moment are pound CAD and pound yen. So again, I'm short pound yen. I've got 1K stop on it. So that's 1,100 pound. We'll see. I just realised I haven't got a TP on that, have I? Hey, let's go for it. You never know. I just realised I probably haven't put a TP on the other one either. This is the problem with trading manually. I'm used to having EAs manage my everything. I'm not used to having to manually do this. I'm just going to put it at the top of that propulsion gap. You can't, I haven't got the indicators on the chart, but there's a propulsion gap there. So I'm just going to ride the top of that propulsion gap with that one. Pound. I think I've got TPs on that. Yeah. So the euro pound is the gap fill. Made 4.5% yesterday on RSI2 strategy. Haven't got it. It's my other terminal. Haven't got it open. Yeah, I did as well. Yeah, good day yesterday. Longs Euro CAD, shorted US CAD. Got into multiple positions on those two and got out prior to the news. Very good. Oh no, that's wrong account. Sorry, let me clear that one. Only in pound CAD shorts 2 positions. I probably am as well, I would imagine. So I did 9.5% yesterday, 11% the day before, and 3% the day before that. I'm up 16% this month. RSI 2. Rocking. So yeah, I've got pound CAD short on at the moment and Aussie Swiss short. Break even. Break even as well. Yeah. You should see the other version of the RSI 2 I'm working on. I've been working on it all day today. It's brilliant. It's one of those equity curves you look at and you just go, can't be true. And I can't fault it. I can't not make it true. It's brilliant. It's brilliant. I lost an hour of my life watching Fed press conference. Don't even do that. That's ridiculous. Never watch the Fed. The only press conference I watch is the ECB, and I only watch that because of Barrier Guy. The man that removes the barrier. That's the only reason I watch the ECB press conference, just to figure out whether or not he's going to be bald or have hair, whether he's going to have sunglasses or not. Because occasionally he does. Don't know why. He's indoors. It's a press conference, but he does sometimes. Yeah, don't watch it. It'll bore the hell out of you. The other thing the thing with watching press conferences is most of the time you don't understand what the hell they're talking about. Most of the time they're giving a load of information which is woolly and doesn't mean anything anyway, and the market will react way before you can even digest the information. So it's pointless watching it. Yeah. If the market suddenly drops 1.5 ADR, I know that Powell has said something negative or positive about interest rate change in this case. Yeah. You can tell what Powell's saying by the way the market moves. If it's jittery like that, you know he's talking about something very important. That's when I tend to get out. But yeah, can't watch it. Drives me nuts. Only to realise the world and markets need adult supervision. Getting scary out here. Yeah, scary everywhere. Scary everywhere at the moment. Doesn't matter who you put in charge. We've got in the UK, we're about to have our elections in July the 4th, and our main ruling, obviously Conservative Party, is going to have the biggest loss ever in history, according to the polls. And what they've done is get inflation from 11% to 2%. So what have they done? They're getting voted and booted out because they've done exactly what they said they were going to do and improved everything. Who are we putting in charge? If you do a good job and you get kicked out, mental. They've obviously done a load of bad stuff as well, but everybody's going to have to lie in politics now because everybody in the world, every government in the world needs more money. Yeah. Every government in the world at the moment is saying we won't increase your taxes. Where are you going to get the money from then? I don't know how they're doing it, but they're all lying about it somewhere. That's what happens, isn't it? Happens everywhere in the world. David, I tried to limit my exposure to max 3 trades at one time. Yeah. But can't beat 11%. What's your target? Been getting nice results, risking 1% for 0.5%. Are you talking to Harold? My target is 1% for single trades. So Harold's talking to you. Okay, I'll just carry on my own. You just talk amongst yourselves. Is that the stop loss RSI one you talked about? What that I'm trading here? It's a hybrid. Yeah. This is a hybrid of it. So I'm trading 3 different time frames with 3 different RSIs, just off the back of testing that I've done, really. But it's the same thing. Yeah, it's RSI extensions, but using a stop. One thing I will say about FTMO, I read their small print yesterday. You've got to be very, very careful. These prop firms are all out to get you, as we know. But right, what strategies am I allowed to use? Right, clause 5.4 in their terms and conditions. Yeah, look at this. So this is about trading strategies that you're allowed to use. Okay, so the way that I'm trading at the moment on here, trading manually, not using EAs, so they can't get me for using EAs. I'm using a stop loss. Yeah, they go on about risk and dodgy strategies all the time. I'm using a stop loss, you can't get me there. Adding to losing positions could get me there, because on this one I have averaged into it, but it's not using martingale. And every single trade, both of these trades, I've got a stop loss. Different stop losses, admittedly, because they're different trades. Yeah, that's got £1,000 risk on it. That's got £1,000 risk on it. But you read their terms and conditions, right, on how they can get you. Yeah. So forbidden trading practices, the usual stuff, knowingly or unknowingly using trading strategies that exploit errors in services such as errors in display. So data issues. Yeah, no problem. Perform trades using an external or slow data feed. No problem. I'm using your data feed, right? Your platform, your data feed. You can't get me for that, because if you turn around and say you're using the wrong data feed, you provided it. Platform alone or in concert with other persons. Perform alone or in concert with other persons. Basically, trading in groups. Prove it. Well, for a start, I'm doing it live. Yeah, I've got evidence. But anyway, perform trading in contradiction with the terms and conditions of the provider of the trading platform. So you can't do anything dodgy on MT4. Fine. Use any software, artificial intelligence, ultra high speed, or mass data entry which might manipulate, abuse, or give you an unfair advantage when using our systems or services. No idea what that means. Probably get me on that. But the one that was interesting to me is G. Yeah, this is the one they can get you on. It doesn't matter what you do. They cannot pay you because of this. Yeah. Otherwise perform trades in contradiction with how trading is actually performed in the Forex market or in any other financial market, or in any way that establishes justified concerns that the provider might suffer financial or other harm as a result of the customer's activities, e.g. over-leveraging, overexposure, one-sided bets, or account rolling. There is no definition anywhere of over-leveraging or overexposure. One-sided bets means trading in one direction, yeah, with multiple positions. I've read this. So if you perform trades in contradiction with how trading is actually performed, who says how trading should be performed? Yeah. In the Forex market or any other financial market, or in any way that establishes justified concerns, FTMO gets a little bit worried, yeah, that they might suffer financial loss trading a demo account with no money, right? That clause G there, they can turn around and go, 5.4, read G. You're not getting paid. There's nothing you can do because there's no definition of over-leveraging. Whose opinion is over-leveraging? So if I go 2 lots long on something, right, and risk 2.5 grand, that's fine. If I then go 1 lot on the same FX pair, right, or rather on a different FX pair on the same currency. So I go 2 lots long pound US, and then I go 1 lot long euro US, right? I've 3 exposures on the US dollar there with 3 lots. Overexposure. Who defines what the maximum exposure should be? They give you a 5% daily loss limit. Surely that's your exposure. Does it matter if I trade 7 pairs or 1 pair? It's their opinion. They get you on their opinion. In their opinion, that's not what you should do. Absolute killer, that. So I went on some forums, yeah. There's loads of forums and Discord channels and stuff about prop trading. People are getting killed by this. FTMO are turning around and they're not paying people because they are saying that they are over leveraging, right? They do not, they give you a 1 to 30 leverage on a swing account, right? They give you a 5% daily loss limit, yeah. And if you go a little bit too heavy, they'll take away your account. Even if you make money. One-sided bets. If you get into a trade, it goes in your direction, it pulls back and you add another trade to it, that's a one-sided bet. You're over leveraging. You're adding to a winning trade. But now if the trade loses, you'll lose twice as much. Yeah, I've added to it, mate, because it's gone up. I'm winning. I'm adding to my winner, which is best practice. Yeah, absolute killer, this thing, right? And there's people getting caught out by this term. And they state it in here, look. Please be aware that practices have nothing much in common with serious trading. Be aware of practices that have nothing in common with serious trading. What is serious trading? What do you define as serious trading? For me, it's making money. So if I make 15% on my account because of a news spike, because I've got 3 positions on it, which I've held for a week and I've added to it twice, you're telling me that isn't serious? No, it's a one-sided bet. You're not allowed to do that. Unbelievable. So just be very, very careful. I started reading all of this after I obviously started the evaluation. I haven't done one with FTMO for ages. If you intend to use trading robots, EAs, keep in mind that if you use an EA from a third party, there might be other traders already using the same EA and therefore the same strategy. Yeah. So if you use the position trader EA on an FTMO account and I'm using it, you can't. It's just absolutely geared up. And you won't find out about any of this until you get to your first payout and you go, pay me, please. And they'll go, 12 grand, term G, and you just won't get paid. So be careful, yeah? These terms and conditions are all set up, even if you're successful, not to pay you. And there's people screaming all over social media channels about all of this. And it's too easy. It's too easy for them to turn around. Also, this trading 2 minutes either side of the news, yeah? So it doesn't say you can't have a trade on during the news. So if I go long on Euro US dollar an hour before a news release, and I put a TP there, if the news release hits my TP, that blows my account. Because if the news release is not, if that trade is triggered within 2 minutes of that news happening, because I've closed out in profit, made money, they blow your account. There's people moaning about this as well. It's like, I have a trade in profit. I entered here. It's there. Yeah. So I've put my break-even stop in place and I've put a TP 1.5 ADR away. The news hits my TP. I make 4 grand. They shut my account. That's a bollocks, isn't it? The whole thing. It's just geared to steal your money, your evaluation fee. And the other thing is with the evaluation fee, sorry to go on about this, but it just makes me irate, all these prop firms. I got back into it. I got out of it because of all of this crap. I've got back into it. I'm now looking into it in more detail, going, oh, you're an idiot. You just got back into it again. This is why you got out of it, right? The fees, refund. Yeah, so you get a refundable fee. So you pay whatever for whatever account. Yeah, you get to FTMO trader status, you get a refund. Do you know when you get the refund? When they give you your first payment. If they don't give you your first payment, you don't get the refund. So what they do is they get you to that spot. You ask for a payment and your refund, and they go, no. Clause G, 5.4. You lose it all. Just absolute crook. So we'll see what happens if I pass stage 1 and I pass evaluation verification. We'll see what happens. Anyway, I just thought I'd point that out because I read this. I found something similar to this in my Apex contract when I was funded with Apex futures, and I quizzed them on it, and basically they said, and which is what I did, send us your strategy, how you are trading, and we will make sure upfront that that is okay, which I did. Yeah, and it's slightly different in futures because you can't add. It's very difficult to do any type of position trading. DCAing's okay, but it's first in, first out, so you can't trade it in the same way. So it was a little bit different to this. But with anything like this, if you add a second position in for any reason, you will be accused of that or that or that. If you just do one trade, yeah, with a stop and a TP, and then you trade another instrument like that with a stop and a TP, but both of them happen to have that in it, you're overexposed. But there's no definition for how much exposure and how much lot sizing they allow until you ask for payment. Just be careful. Rant over. I'm unranting, which is why I use my own capital. Let's just have a look at indices. TP hit on S&P. Nice clean breaks today. So TP1 hit. See if we get the second half of that to target as well. We just scroll back on the chat. Can AI picture generate the barrier man? Can AI picture generate the barrier man into your picture collection? We've already got barrier man. Brian did barrier man. This is barrier man. Unfortunately, barrier man is actually part of the barrier. He's gone straight through his leg. Must have been painful. And we discovered that they can't do cars. AI doesn't really know what cars are. It's a train of melting vehicles. That's what it thinks cars are. And for some reason, the cars don't use the road. They use this tiny little bit there. Probably because the road disappears eventually into the pavement. So it has a problem with fingers and perspective. Anyway, that's Barrier Man. And Barrier Man's also got problems with hair as well. Someone's hitting with a shaver, look. Gotta love AI. I'm definitely putting it in charge of my trading because it's really good. He's jittery because him and John went down for a few whiskies beforehand. Yeah. Powell's looking younger, isn't he? John's looking hammered. Mumo, that other version, will you avail an EA for your community? What do you mean, that other version? Oh, no, that's the... No, it's not mine. Somebody else's. Can I lend you 30k? No. SIH just hit TP1, but the stop buys are still in place and the EA did not place a stop loss. S&P 500. Mine did. I don't know. They're removed. Break even stop. I don't know FTNet. It's doing what it should do for me. Watch this pre-market low we're just coming up to. TP2 for me at 3R is the pullback into propulsion yesterday at the end of the market. So if we can get through the pre-market lows today, that should get hit. There's a good chance we might get a propulsion gap fill as well. That means that the US dollar at the moment is probably rallying. Getting a push on the US at the minute. I don't know the answer to that one, FTNet. I can't really answer. Article 1, Section 6, if you use your brain, breach. Okay. Franco, you do come out with some funny sayings every day. They take my brain an awful long time to unravel what you're talking about. If you trade, we can decide not to pay you. Basically, yes, that's what they're saying. So if you take a trade and you make money, we might pay you, we might not. But we'll let you know when you get to payment threshold, which will be roughly 4 to 6 weeks after you started your first evaluation. And we'll let you know whether or not you've wasted your time, is what the contract says. I can't remember where it is. I found it the other day. I can't remember where I found it. I had to hunt for it. I went through my my Forex funds contract, my Apex contract, my E8 contract, all from funded. All the funded accounts have basically had with different prop. None of them had a clause that ridiculous in them. None of them. It's the most ridiculous clause I've ever had in a contract. If you over leverage or you overexpose, we're not going to tell you what that is, but if you do it, you're dead. Ask them what they class as over leverage or overexposure. And they will give you a definition. There's a definition on the website, but it's woolly. For example, if you were to do this and something like that, then that would be classed as overexposure. No. I need rules. You want to give me rules to trade by, you need to give me firm rules, not woolly rules that you can bend at a later stage, FTMO. Pre-market lows just been tested on the S&P. I'll lock a little bit more in on that. Just in case we get a bounce. Which we are at the moment. Should get a nice pop through this level because there'll be breakout stop orders set down there. If we can get through it. If not, let's see that hold. They don't let you average into positions as they know it's effective. Exactly. This is the thing. Everything you know works in trading, they want you not to do because it's not, this is why they've all changed as well. Look, every firm, including FTMO now, they've all changed their wording because they're all getting caught out by the Financial Conduct Authority and the Fed. Monetize your demo trading. Master your trading skills on our simulated trading platform. Improve your trading on a demo FTMO account with up to 200,000 and get rewarded up to 90% of your simulated profits. They are none of them now saying that they fund you with real capital. Because that is why my Forex funds director got taken out, because he was basically lying and manipulating behind the scenes. So they've all now got to say it's all simulated. They won't tell you how they pay you, but it's obvious that everybody that fails goes into a pot of cash. And if you make money on a simulated account, they pay you a percentage of that simulated funds, but it comes from the people that are failing evaluations. We know that 0.03% of people get through to payment, which means 99.7% of people just give you money if you're a prop firm. Brilliant. It's a great business model because they don't let you trade in any way, shape or form that is actually profitable. You've got to be lucky. I'm being lucky at the moment. If I get an unlucky streak, it's blown. This drops down today by 2 ADR. That gets completely undone. Whether or not I pass this evaluation is dependent on whether or not people start buying the euro or selling the pound today. That's it. There's nothing else I can do about it. The banks are in charge. And if I'd have pressed the other button, I'd have made money. It's just, they know this. They all know this, all these prop firms. They're not stupid. This is how they make their money. You basically pay for a demo account. They now have been hiding that for years, since 2015. For 9 years, they've been hiding the fact that you've been trading demo accounts on funded. We all kind of knew it, but Now they have to say it by law. Otherwise, they get shut down like all the others. But now their contracts have got so bloody tight, it's almost impossible to make money, isn't it? You've got to be so squeaky clean, but they won't define what squeaky clean is. That's why I stick to futures. Stay within 30% consistency rule. Yeah, futures is so much more cut and dry. There's no manipulation because it's all CME data feed. There is no manipulation. Prop firms can't manipulate the Chicago Mercantile Exchange. End of story. That's it. They set your rules. This is what you got to do. It's so totally above board. But they all have hideous trading conditions with trailing stops, and you're limited by lot size, which makes it very difficult. But people do make money at it. Just a lot harder. AXPEX solidified their DCA rule last week. 1 DCA allowed in drawdown only. Oh, right. Did they? Okay. You can add to a position in profit. No problem. But this is the thing, right? If you do any trading course in futures, right, you will see the people teaching you futures trading, using most of the time some kind of volume profile or order book software. They, by matter of course, do what they're taught in the banks and institutions, which is DCAing, dollar cost averaging. You do not enter one trade, one TP, one stop loss. Nobody that makes money in this market does that. They average into a position. If there is a whacking great iceberg order sitting there and I can see it on the order book, I will add a position. It will push up. I will add a position. It will push down. I will add a position. It will push up. I'll add a position. It will push down. I'll add a position. It will break out. I'll add a position. It will push up. I'll add a position. And then it will go and I'll go, brilliant. Thanks very much. That's how you do it. That's how they do it. That's all the banks do. They DCA in and they DCA out. They will scale in and scale out. They put rules in place to stop you doing it. Why? This is how you make money. It's nuts. It's been going on for years. We know it goes on, but it's just becoming ridiculous now. Pain in the arse, a lot of them. But people that haven't got money need them. So it's both double-edged sword, isn't it? Did you ever sign up with Darwinex? Yeah, I've been with Darwinex for years. Been with Darwinex for over 5 years. Lucho, just joined the live. Welcome. Why don't you use your friend's RSI strategy in the FTMO? I am. Well, I am and I'm not. Guess what? My friend's strategy. I keep calling him a friend. He's not a friend. He's just a guy I know. Guess what his strategy does? Bearing in mind he comes from a bank. Yeah. Do you think he takes one position, or do you think he takes multiple positions? And they let you do that. So this trade I've taken on euro pound is a prime example. I took an entry there. I took an entry there. I've added to a losing trade by dollar cost averaging. I'm pretty sure if this hits target and I go and ask for a payment, if this was funded, it's not, it's valuation obviously, but if I went and did that and asked for it, I'm 90% sure they would say, no, you over leveraged there, mate, by adding to a loser, and it's a one-sided trade. Oh, I've got £2 shorts on at the same time. That's massively over leveraged. No, you can't do that. Yeah. There is no rule that says I can't do it. There's no rule that says I can't do that. But there is a clause that says I can't do either of them. But it won't tell me what it is. See what I mean? It's impossible. Yeah. What can you do? You can press the button once in one direction on one instrument with a TP and a stop loss, but do not take another trade on anything. Otherwise, they may turn around and say, hang on a minute, you traded short on the Australian dollar and the US dollar, and you traded short on the New Zealand and the US dollar. Or no, let's say you traded short on the New Zealand dollar CAD. Yeah, short New Zealand CAD, short Aussie US, right? 4 different currency pairs. Those two are correlated. I'm pretty sure if you hit target on that, they'd say, you realize you shorted the Aussie and the New Zealand at the same time. They're both commodity pairs based in the Asian session. and they both moved and hit target at the same time, that's overexposure. Guarantee it. It is. But there's no wrong. You know what I mean? You're going to get caught. It's just, I really, really want to pass it just to prove the fact live on stream. Because they don't know who I am. I'm just a number, aren't I, in their database. How do you set up your fund to trade other people's money? How do you set up your own fund to trade other people's money? I've no idea. Yeah, I mean, you have to be regulated, yeah. I don't know. I don't do that. Are there any real prop firms out there that actually give you funds? I don't know. There are real ones, yeah. There's real proprietary trading firms, but you won't find a proprietary. There's a number of proprietary trading firms in London, and obviously all over the world, that will fund you, but you have to pay them a desk fee, yeah. So they will charge you 10 grand a month to have access to the funds, not $300 and I'll give you 200 grand. Give me 10 grand and I'll give you 50. That type of stuff. That's a prop firm. They are real, yeah. But this whole industry has come from the proprietary trading companies out there. Darwin IA is as close as you'll get to real prop, where they have an investment pool, and once you've proven your strategy on a demo account or a live account or any type of account, they will then put funding into your Darwin. But if you produce more than 5 or 10% profit in a month, they will shut it because it's too high risk. They will only pay you a percentage of what the investors put in, but the investors only want a 4 to 5% return a month maximum. Even that is pretty risky and pretty high. So think about the amount of money you can make from that. It's tiny. You're better off going and getting a bank loan and doing it yourself. You earn a hell of a lot more cash. Not that I would recommend doing that, because you trade with what you can afford to trade with, but it's all a bit dodgy. Opinion on why the DAX tanked so hard today? I don't know. Not sure. So why do they take 20% of your simulated cash? Exactly. This is the whole thing, isn't it? But everyone now gives you 90%. There's people out there, there's prop firms out there now that will give you 100% payout, because they've now had to admit none of it's real. It never has been real. So we'll just give them the lot, because no one's ever going to get it. And if you do get it, and you're part of that less than 1% lucky people that get through 2 lucky evaluation stages into a funded account where your luck continues, and then you get to the point where you can actually get to a payout, might as well just give you the lot, because they've made, I think it was the figures on my Forex funds where they were making $16 million a month in evaluation fees, and they were paying out less than $1 million. They were banking 15 million net profit. That's the sums. Yeah. That's why they were everywhere. Yeah. If you're making 16 million a month, you can advertise for 5 million a month and still make 5 million a month. This is all the brokers do, isn't it? This is why you see everywhere you go, if you turn off ad blockers, yeah, there's broker adverts everywhere, yeah? The reason is because they lose 70% of their customer base every month, or 60%, or whatever the percentage is. 60% of people lose 60% of their balance in 60 days. 90% of people lose 90% of their balance in 90 days. If you've got a business where 90% of your customers are disappearing every 3 months, you need to replace them. So every penny you make, you've got to put into marketing. Otherwise, you won't have a business. The whole industry revolves around extracting money out of people. Everything is geared to extract your cash. Good, isn't it? Anybody still want to do this as a job? FTMO has these ridiculous YouTube videos interviewing traders who open 15 lots on 100K accounts. Yeah, and then they have a term. I haven't watched any of their videos, but that would make total sense. E8 have a leaderboard which shows you the people that have passed the evaluation fastest. There's people that have passed the evaluation in under 2 minutes. That is promoting me going 50 lots long. Tick, 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 close, done. Passed. Not good, is it? It's not trading. It's binary options 2.0, basically. This seems to be okay for them, but if you scale in one lot with 4 steps, they will not pay. I don't know for sure, but I'm just pointing out the contract says woolly, 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 woolly. Yeah. If it was going to be specifics, they would put specifics in the contract. You can put what you like on a website. The contract you sign is the contract you sign. So if you say one thing on the website and the contract says something different, they'll just turn around and go, yeah, the website's for evaluation. You didn't read your contract. They will always get you. Amanda also does prop firm now. Prop trader. Oh, yes, I've seen this one. Yeah. Read the contracts, though. I mean, I'm 99% sure they will tell you it's all demo, which it is. Virtual funding level. There you go. But I mean, it makes sense for people like this to get involved in it, doesn't it? They're providing the platform, they're providing the feed, they're manipulating the data. Yeah, the brokers manipulate data. I've shown you the software they use to spread the accounts and margin call people. They've got software that says spread it by this and you'll get that much. Spread it by that and you'll get that much. Which button do you want to press? I'll press that one. Excellent. There you go. Here's your money. Yeah. If they're now also taking a fee from you to spread the market, double money. Brilliant. 100K, $700. They're bloody expensive, though. That's $200 more expensive than all the other prop firms out there for a 100K account. All the other prop firms, most of them are $499. Target's the same. Target's the same. That's the same. That's the same. That's the same. They give you a discount. Most of them do. EA give you a discount as well. So it's all the same, isn't it? It's just that's more expensive because these guys have got more marketing budget, I guess. I don't know. Same thing. It's the same thing. TP hit S&P. Nice clean break today. Straight down 3R. So we broke pre-market, hit propulsion. There's that area I said about, which was the pullback into propulsion yesterday. So limit buys triggering at propulsion. May well break down today. So ADR today is the propulsion gap fill. So if we get this level broken today, these limits don't hold up, we'll probably flush down to ADR today, or at least have a good go at getting there. Good day. Real props, you have to put in 3 to 4K of your own money to get funded. Yeah. Your own money is the max drawdown. Yeah. There's lots of, the prop firms all work in different ways. There's Audacity's one. Although Audacity have gone the online route. Audacity used to be very real world based. Audacity used to have, there you go, chairs. Actually, have chairs. You used to have to go through, I think it was 3 months proof that you could trade with your own funds provide that P&L to them, then they would put you onto a low fund account, which you would have to pay for, and then they scale you up basically as your P&L progresses. So to get to the stage of managing 100k capital, for example, would typically be 6 to 12 months. And you used to have to go to the office, obviously, but then they went remote, and you know they've gone online now, so they've kind of jumped on the bandwagon of the rest. Look, but let me look at the fees. It's all the same. It's all the same. It all works the same. But there was another one in London. Can't remember the name of them. They probably won't come up high. BTI, they're not even based in London. Lux. No, it wasn't Lux. They're online, aren't they? I don't know. There was another one. Maybe they're not there anymore. Oh, Axia. There you go. Axia futures. So Axia are another one, proper proprietary trading. Well, they used to be anyway. But part of their onboarding process, you had to go and do their trading, yeah, and you have to trade their strategy. So to become a prop trader, you have to go through their trading, prove that you can execute their trading, trade within the strategies that they provide using a certain amount of discretion, and then you had to fight for a chair. Yeah. So if you weren't performing as well as that guy, and that guy is not got a desk yet, he has your desk because they want to make money. So you get kicked out. And it's the same in banking. Yeah. Of 2,000 jobs in trading and banking, yeah, you get 2 jobs for 2,000 applicants. Very hard to get into. These types of places are the same. But regardless, they made money out of you by selling you their course. Maverick is the other one Brian's just said. That was the other one I think I was thinking of. Are they remote now? Is it them? They've been around a long time. Might be them. They ring a bell. But their website looks really crappy and old, doesn't it? But I think they're futures as well, aren't they? So, I don't know. Anyway, prop. If you can, do it with your own money. Do it with your own money. At the end of the day. Darwin-X is all set up for investor trading, yeah. Trading investors' money, yeah. That's the thing with it, isn't it? If investors are not interested in making 10% a month, yeah, nobody in their right mind with $1 million to invest is going to turn around and you go, hey, I can give you 10%. They'll turn around and go, yeah, right. Warren Buffett only returns 8, mate. You better than him? Nah, I'll give Warren my $1 million. They're not interested. If you're making 4 or 5% profit a month, you're on the verge of them going, no, too risky. Because if you can make 4 to 5% a month, I can lose 4 to 5% a month. If I can lose 4 to 5% of my $1 million, that's a lot of money. Not interested. Too rich. I have an Oanda account. The prop side is a sucker's cash grab operation. Yeah. Wouldn't surprise me. On Darwin-X, what is your Darwinia? No, I haven't got a Darwinia. I had a Darwinia. I haven't got one anymore. Mine stopped when I stopped trading it. It was the S&P 500. And it was producing 15% a month, 17%, I think it got up to. Sorry, a year, not a month. But I didn't get any investment. This is how this Darwin, for those of you who don't know what I'm talking about, the there we go. Darwin's. So the Darwin's basically, oh Christ. No, just show me them. So it's such a difficult website to get. You've got to go through this now. You used to be able to look at it all without any problem. But basically all it is strategies. So it's a list of strategies that basically are P&Ls. They're just P&Ls of strategies which are running on accounts. And investors put money in here. So if I've got £1 million spare, I'll stick it in Darwin X, and Darwin X will allocate my capital to the top performing traders or trading accounts, which have strict criteria that you have to meet. And then you will get a percentage of how much is invested in you and the return on that. But to make it, you have to have ridiculous sums of money to actually make it worthwhile. So my account producing 15-17% a year didn't attract any investment. Yeah, most people would snap your right arm off or your left arm, whichever, to get that type of return. Yeah, your banks are never going to give it to you. Your pension funds are never going to give it to you. But there's people outperforming on there. I was trading one instrument. So there's a single portfolio. If you've got a single instrument portfolio, again, they're not that interested because there's no diversification. They may use you as part of the diversification, but if I'm only trading the S&P 500 and they've got 3 strategies that they want: Wall Street 30, NASDAQ, S&P 500, and some Forex, for example, you might get picked up by one of the investors. But if you've got a 5 or 10 FX pair Darwin, you're much more attractive because there's diversification in there built in. Yeah, so there's so much that goes on into it, but you will never make a fortune out of it. There you go. There's some odd. Yeah, so they're looking for many metrics. You can't really see it on this video. Oh, there it is. This bit here. Yeah. You cannot even get investment unless all of these are ticked. These are the criteria that they measure you by. So if you have all of these but 2, you can't even get funded. And you will have to work on those 2. And if your strategy means that those 2 just do not fit, you waste your time. You can waste a lot of time, and you can basically get to a point where you're just becoming profitable before you die in this industry. Because there's so many rules everywhere. Use your own money, do what you want. So much easier. It seems that the new prop firm model is eating into B-book model on traditional brokers. Could possibly be, yeah. So yeah, where they give you money bonus for signing up. Yeah, I mean, this is the thing. It's all, this industry could change over to that sort of model where you can't trade with your own capital. You can only trade with their capital. It could switch, couldn't it? Different countries. I don't know. We'll see. Out of S&P and NASDAQ short. Good man. So am I. So that propulsion limit there. Might crash that, though. I think there's a good chance that'll fall today. So if you look at the DAX today, what the DAX did at the open, DAX absolutely collapsed today. So we're 150 ADR on the DAX now. That was the collapse on the DAX straight to ADR before the New York Open. New York Open obviously has driven lower. So there is more downside. So you could take an accumulation break short. We'll get in now basically and add on the drop, but may not go. Maverick literally just gives you the leverage, though. Is it? All right. You have to put up 20% of the capital you want to trade. If you then go into 20% drawdown, you lose all your money. Right. Okay. Yeah. See, I mean, this is how prop is, isn't it? So my evaluation that I'm running here on FTMO, I've got a 14K, £14,000 drawdown limit. So what I'm actually trading is 100% blown account on a 14K account. Yeah, they call it 140K. It's not. It's 14K trading because that's all I've got to lose, isn't it? Yeah. So if you take 100K evaluation and they give you a 10K drawdown limit, you're trading a 10K. You're trading a 10K account because if you hit 10K, you lose. But forget that. It's nothing to do with it. Your risk has to be based on that. So my risk is based on a 14,000 account. So basically, I'm using £1,000 risk on each trade, and I can have 14 trades go wrong. That's what I'm actually trading. And what I need is 7 trades in a row to go my way, because I've got a 7K target. So I just need 7. Well, actually, it's more than that, isn't it? 9K, I think, 10K, something like that. That's what you're really trading, which is exactly what the real prop firms are doing by giving you access to liquidity. But it's real. Yeah, your orders are executed real. It's all real. Whereas this is all crap. And there's no rules, yeah? If you go to a proprietary trading firm and they are literally just funding your capital, you trade how you want to. They're not going to say you can't do this, you can't do that. They'll probably look at you if you're suddenly doing what is ridiculous and they go, that ain't going to work, mate, because that's what they do. They make money out the markets. VP trades with them. Maverick, yeah. I think you find it hard to get funded with them as well. You know, get in with them. I think you find it's quite difficult. He's hoping we'll wake up tomorrow and see the yen rallying like it's never done before. What, you mean rallying as in the powering up and everything coming down against the yen, or rallying as in the weakening of the yen? Depends which way you're positioned, doesn't it? I couldn't tell you. Obviously, I never can tell you. But right now, it's certainly looking bullish. We've got a rising wedge forming. Yeah, we're making higher lows and ever such lower highs, but we're making much higher lows. You know, this whole thing is one wedge waiting to pop at the moment. But the thing we've got on our side is the US dollar has been weak. Had weak news. 2 days of weak news on the US dollar. But that means nothing, does it? Tomorrow is a new day and tomorrow is the rate. So we'll see. It's going to be an interesting one. You're positioned very long on the yen. So hoping everything dies against it. Yeah. That's, yeah. We've got a flag forming on the S&P. I think there's a good chance tomorrow for the yen. But I don't know. Like I said, that was the last interest rate rise. If they raise interest rates again, I mean, there's no reason for it to happen. Fundamentally, it's completely the opposite of what happens. But I would question whether or not that was part of their plan. Now they haven't got that plan, whether that will happen this time. But think about it. A 0.1% increment on your interest rate is nothing. It's not enough for everyone to go, oh, yeah, that's where I want to have my money. It's not, is it? Whereas with other currencies, you know, look at the interest rate differentials at the moment. Yeah, we're sitting on the yen at 0.1. Where do you think it's best to put your money at the moment? In the dollar or the Japanese yen? Where are you going to earn the most interest? Not in the yen, is it? Yeah, so I'll tell you what, we'll put that up to 0.2 tomorrow. All right, well done. I'm still keeping it here. I'll even put it in the Swiss franc. It's just, you know, there's no reason for the yen to go massively powerful. The market will move potentially, but if you do get a spike tomorrow that gets you into a position where you can get out of any Japanese exposure, I would do it. If I was short and I got a break even, I would just take it and get out and stop and just wait and see what the Bank of Japan says, what their forward guidance is. Are you going to continue bond purchases? Are you going to increase your bond purchases? If you're going to reduce your bond purchases, kiss your ass goodbye, because how else are you going to dig yourself out of holes like that? Yeah, there's too many question marks. Very hard. Very hard at the moment to decide what to do with that. Oh, euro, pound. I hate you. I hope you're not going to make me regret missing my exit. When I looked at this here, yeah, and at the time I hadn't seen that. When I looked at it this morning, I was in $800 profit there, and I was thinking, I hope this propulsion gap doesn't hold. That was exactly what my thoughts were, and I hope it's not proving me right. Certainly looks like it at the moment, doesn't it? Because we've got a double bottom in propulsion move into a double bottom. So if this is an ad, we're probably going to break that. However, if this is now forming a higher low because we've formed 3 higher highs, that is target. I mean, if we get back up to there, I will probably get out, because what I don't want to see is an M pattern reversal in that propulsion gap, because if that holds, that's coming down hard. We've had nothing from the Bank of England about interest rates yet, so it could go either way, but we'll see. Tricky. Everything's tricky at the moment. It's always tricky. Everything's always tricky, isn't it? That's why it's trading. If it was easy, everyone would do it. After years of trading, it's very disappointing that most programs in this industry play on traders' expectations. Yeah. Apex has paid me, so I can't complain yet. Just waiting for the bottom to drop. You'll be fine with Apex. Apex are... I was with Apex, and they are their best. They are sort of the best out there. They haven't got the best payment conditions. Take Profit Trader have the best conditions for futures, but they have been promising FX for years as well, and they've now taken that off of their website. So this is run by a Canadian hockey player, ex-Canadian hockey player. And the thing I like about them is the instant withdrawal, which is why I went with them after using Apex. When I got funded with Apex, it took 8 weeks to get paid. And that's what attracted me to Take Profit Trader. And even in the futures market, it's all simulated still. Yeah, they're not funding you with any real cash. It's just different with futures. Less manipulation, basically. And it's cheap. It's cheap as chips to get funded. It absolutely costs no money at all. If you want 100 grand, $198 to access 100 grand. But that's what gets you every time. No trading bots. 5 days, your most profitable day cannot. And this is the other thing that I hate about prop. Right? We know in this industry, right? Look at my P&L. In this industry, luck plays a part. Yeah, I got an 8.8% day there. I got a 3.3% day there. Why? Because I've been sitting in drawdown waiting for payday. Right? When payday comes, I take my pay. No. You can't do that. You can't have 50% of your monthly profit happening on one day. No, that's not real. Yes, it bloody is. I do it every month. Yeah. So what do? They stick a rule in to say, if you have a lucky day, which you will, because that's what trading is getting a lucky run, right? It's luck. It's random. Market's random, right? If it moves at random 3 times where you're expecting it to go, take the bloody money. No. You can't have that. No. We'll take that off. When you take it off, it's my payday. Too many rules. All against you. The whole industry is a scam. Yep, it is. Other than me, I don't know anyone else on the internet that trades profitably. Yeah. Not many. They're all trying to sell you a course, or they're an affiliate or whatever. The biggest guys on YouTube, the ones with the tens of thousands of viewers on their live streams, or thousands of viewers on their live streams, and hundreds of thousands of subscribers, all of them either are affiliates or they own companies in trading. That's how they make their money. They come on, they show you stuff, and they either sell you a course, they send you to some software that gives them a big money kickback, or they own a brokerage. Yeah. How the money is made. Money makes money. That's basically it. There's very few people that, and I sell indicators, but I don't do this to sell indicators. If I had to live off my indicator income, I would be living in a shoebox. Very small shoebox. In fact, it wouldn't be a shoebox. It'd probably be a folded cardboard on the pavement, to be honest. That'd be nice. Ever tried running MT4.5 on Linux? No. Never used Linux. However you say it. I know a few who trade profitably, but not with less than 20k. No, you won't find many people that trade with less than 20k because you won't make any money. People that make money in this industry don't make more than 5, 10, 15% a month, if that. That's how you make money. You have to have capital. I've said this many times before, haven't I, in here? It's a business. Business is, you can't start a business on 5k and actually expect to make 5k a month. You're not going to double your money every month, are you? You're going to make a percentage return on your investment. If the percentage return is higher than the bank is giving you in interest, it's worth doing. Other than that, if you've got $1 million, I said it in here as well, haven't I? If I had £1 million to trade with, do you know what I would do? Stick it in the bank. Just going to keep paying me loads of money at the moment. Look what I'm going to get out of it. If I stick it in the bank right now, I'm going to get 5.25% on it. 5% return a month for doing absolutely nothing. Take it. Damn right I take it. Yeah. Why would I have to sit in front of a computer monitor every day, all day, trying to generate somewhere between 5 to 15%? If I had $1 million, I'd stick it in the bank. Or I'd invest it in a business or something like that. Yeah. You don't trade with it. It's ridiculous. Too hard. Apex is considering rule changes. They did a community vote looking at daily withdrawals after 8 trading days. 40% consistency across the board. Yeah, it's the consistency. That's what gets you in the futures. It's the trailing drawdown and the consistency rule. There's always something there. Every industry has got an Achilles heel. Every system and strategy has got an Achilles heel. So all they do is they find out what the Achilles heel is, how it's going to go wrong, and they set the limits just above it. Yeah. They know that 10% drawdown on an account is totally normal. So we'll give you 10% so you can hang yourself with it. And when you go 15% and then you pop up to 7% in profit, they'll go, if only you hadn't have got that extra 5. But they know damn well I sit here in 10 to 15% of drawdown regularly because that's how you make money, by putting risk on. That's the way it's done, isn't it? Consistency. Having an 8% day. No. Yeah, why not? Yeah. I'm building a position, right, on the euro pound. I've got 4 positions on. If I had 1 position on and it moved up to there, I would take $200. If I have 4 positions on and it moves up to there, I will take $10,000, right? If there's a sudden massive spike at 225 ADR today, while I'm out walking the dog, making a coffee, not at my desk or whatever, are you telling me that I'm not allowed it? Bollocks. Of course I'm allowed it. I've put a load of risk on because I think this gap's getting filled. If this gap's getting filled, you're paying me because I've sat for 5 days waiting for you to do it. Now, you can't take away my money because you've got a rule that says you can't have more than 50% of your profit in one day. Yes, you can. This is how it works. You sit there for ages with the market doing nothing, waiting for a news event. That's where you build a position. What do the banks do? Accumulate and distribute. What's accumulation? Building a position. What's distribution? Taking profit. We're doing exactly the same as the banks are doing. But the prop firms know that's how they make money. The prop firms know that if you happen to be accumulating in the same direction as the banks, you're also going to make money. The banks don't sit there and make X% a day. They make a big load of cash in one go. This is what accumulation distribution is. Supply and demand, as other people call it, support and resistance. Accumulation, distribution. Which way do you think the banks were positioned? Yeah. Whoops, we got caught offside. Okay, accumulate a book and take it back there. Yeah, come back Tuesday, Wednesday next week. We'll have a look. What happens? This is what they do. They know that. The prop firms know that. Most traders don't. This is the problem. You get sucked in. Only with a 1K balance to trade with, I only lose money month on month. Position trading isn't really suited to small balance accounts. No, not. You can make money trading with a small balance, yeah? But the problem is you fall into a trap. The only way to make money with a small balance, if you've got, like, most people come into trading with somewhere between 2 to 5K. And at some point in your trading journey, you will come across compounding. And the spreadsheets tell you that you can turn 2K into 4K, and then you turn 4K into 8K, you turn 8 into 16, and then you keep going and you compound your account and you get an equity curve that goes like that. What they don't tell you is that on the equity curve, that 2K might turn into 0K because you hit a bad run. Or that 2K turns into 1K because you hit a bad run, and then you aim to get back to that 2K. So what you do is you take your profit too quick and you don't let things run, which means you never get back to that 2K. Now, they don't tell you what actually happens. If you put 2K into an account and you risk 10% of it on one trade, and that is the trade that makes me that 8% on that day, will make you suddenly 10K. Now, all of a sudden, you're sitting on 12K. Problem is, your brain now goes, I can turn 2K into 12K. That's what you now have as an expectation. And you will continue to try and do that. You'll replicate that lucky thing that you had, which happens to you once every quarter. For the rest of that quarter, you'll sit there trying to get that thing happening and it won't happen. So you go, right, that strategy doesn't work. There must be another one out there that can do that. Hop, 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 hop. That's all you ever do is you hop. It's just the cycle, isn't it? It's the cycle that you get stuck in as a trader. But you can do it, yeah? In the same way as you could walk into a casino, right? And I've done this many times, like playing roulette in casinos. When I go to the casino, I always use my birth month, my birthday, yeah? So I walk into the casino, I put the numbers down, right? Comes up, first time, I go 36 to 1, thank you. Walk away. Do I ever walk away? Of course you don't. You go, right, that's going to happen again. Oh, yeah. Got to go, love. Blown it. That's what happens. Everyone can get lucky. Yeah. Sometimes, and it's happened to me, I've gone in and I've put it on and I've gone, haha. And you know, when they give you all your winnings, they leave your original bet on, hit it again. 36 to 1 twice. Thank you very much. Did I walk away? No. I stayed there and I gave it all back to them. Yeah. But my expectation was, this is easy. Yeah. Your expectation when you hit a lucky trade is, this is easy. Imagine if you did your first ever trade, right, and you got a 5 to 1 R winner. You would spend the rest of your life trying to replicate that 5 to 1 R winner, not knowing that it was caused by a non-farm payroll that sent it 300 ADR, and that is now the norm to you. We know that happens 2% of the year. Just depends how you perceive trading when you arrive, isn't it? Steve, a name 3. Pass. Of your 11,500 subscribers, how many do you think have more than 100K to trade with? Very, very few. Very few. I had 5K. Now it's 1K. That's trading. Yeah. Very few. I mean, this is the thing. Is you're not going to, and this is why I say what I say. Yeah. This is why I tell you in the bootcamp. Day 1, bootcamp. Yeah. First slides. There's a bit at the front of day 1 bootcamp, right? Which is preamble. I think it's 15 slides or something. I say you're going to go through these 15 slides. We're not going to start the course until we've gone through these 15 slides, right? These are very important, these 15 slides. One of them tells you how much money you're going to make. Yeah. how much your returns are going to be. Yeah, 12% return there in a month. There is no expectation at any point in any of the stuff that I teach that tells you you're going to double an account. In a year, maybe, right? If you can't do the math and work out that 12% return on 1,000 is £120, and you need to pay a mortgage of £1,500 a month, you know that that's not going to work, is it? Yeah. If you need to earn £5,000 a month, you need a minimum 50k. Otherwise, you're not going to earn enough money to make money with, are you? Yeah. You can't start a business that needs to make 10 grand a month profit with 10 grand. Yeah. The shop is going to cost you 15 grand a year. Your stock's going to cost you 25 grand a year. And then you've got to get people into the place. So you've got to advertise it. Yeah. Trading is no different. You can't just take 5k and turn it into 50k or 10k. You can't do it. You can if you're lucky. You can take that 5k. You can put 50% risk on, get a 3R and turn it into a very nice 15k very quickly in one trade. Do not expect that to happen on a regular basis. It's not going to happen. That's what the Lamborghini guys are telling you, isn't it? Look, first slides. Don't know what slide number this is. Oh, yeah, go. Read it. You have 15 introduction slides coming, including this one. Yeah. There's over 160 slides in the bootcamp. Yeah. This is what I do. 0.5% a day. 10% a month. 1% a day. 20% a month. It's easy. Yeah. At no point do I say you can start this with £2,000 and make a career out of it. Never. It's not possible. Day one, realistic. This is what's going to happen. This is what you can expect. And this is why I say, you can't hear me because obviously you're watching a slideshow, but this is what I say in it. Yeah. Watch these 15 slides. Yeah. And I'm going to tell you what you're going to learn over the next 160. If you don't like what you've heard after these 15, piss off and watch the Lamborghini guys, because they'll tell you what you want to hear. These 15 slides, I'm going to tell you what's actually going to happen and what this is all about. And if you think you can do that after what I've said, off you go. Do you know how many people skip this video? Massive amounts. There's a big bulge there after the first 15 slides because they're not interested. Where's the bloody strategy? What's the rules for the strategy? That's all you want. Right, that's in day 5. Yeah. And the first slide on day 5 says, if you've got to this and you haven't watched the first 4 days, piss off and watch the first 4 days, because this is going to mean bugger all to you and all you're looking for is a Lamborghini. I think I actually say it rather than having it on a slide. But this is what everyone wants. This video, day 5 of the bootcamp, gets thousands more views and more time spent on it than anything else. Not interested in the why. It's the how. No, if you don't know the why, the how means no difference. What do you mean take 3 trades and scale into a loser? That's ridiculous. It's because you haven't watched the bloody why, you idiot. This is why I get all the questions all the time. Because people haven't watched or spent any time. And I do get it. You know, Euro Swiss just hit ADR. First ADR of the day. Look. Euro collapsing. Yen is powering up. So there's first ADR of the day. Gap fill, guys, remember? Yeah, that's what we're waiting for on the euro pound. Gap fill, we haven't got there. So this is, I'm hoping, a Swiss franc rally. Yes. So Swiss franc is powering up. So this euro Swiss is being caused by Swiss franc money. So they're buying the Swissy. So everything will be coming down against the Swiss. So the euro, although the euro is a little weak today, well, for the London session and into New York, but it's holding at the moment because most of these euro pairs, that one's done it. Look, euro CAD, gap fill done. decent movement coming. Their consistency rule is based on profit balance. E.g., you make 3k profit, you take 3k times 0.3 is 900. Can be made on that day, yeah. That's how most of them seem to work. Percentage of your profit, yeah. Used to have that in Top Step as well, on Top Step futures. I think theirs was 40% or 50%. But again, it was annoying. And I had this in Apex as well. What that rule does is it psychologically plays on your brain, yeah? So if I get into the NASDAQ, for example, and the NASDAQ rallies, and it pulls back, and I enter a long, and it starts to move, yeah? And I put a protective sell order on that, and it pushes up, and I take an extra one there, and it pushes up and pulls back, and I take an extra one there, and it pushes up, and we get a lovely trend day like we've had on the DAX and we've had on the other indices today, yeah? When I get to this point here, the only thing going through my head is, shit, I've got to close it. Why? Because if I don't, and I make 2k today, which it's definitely got the legs to do, I won't be able to use that because my consistency rule's broken. Come on. Your job is to make money, not to hit a consistency rule. Yeah. You cut your... You've heard the term, yeah? Cut your losers, let your winners run, right? Unless there's a consistency rule, yeah? We still need to cut your losers, but you also need to cut your winners, because if you go too far, we won't pay you. What can you do? I watch Lee Trade and listen because it's like watching Ronaldo or Max Verstappen. Really? This face? It's interesting watching someone who is a goat. Thanks. Goat. Devil. If that chosen thing. Doubt many in here are trading with real money. No. You don't need to. There's also a lot of people that like to do this because it's like a game. It's a bit like gambling. You can gamble with a demo account. You can go into whatever, a casino or whatever, and, play with funny money. It's fun. Yeah. It doesn't have to be a job. It can be also a part-time income, a partial income. There's a lot less pressure on you as a trader if this doesn't pay your bills. If this pays your holidays, or this pays your car, or this pays something small, it's a lot easier because you can lose the money and not have the consequence of not being able to pay your bills. Or you've got backup cash, another income stream or something, yeah? It's a lot easier to do it psychologically if you don't have this as your main income. And this is why people find it very difficult to move over to that, because it becomes ultimately more stressful. And you have to have gone through many years of getting it wrong to get it right. Yeah. But everybody gets into this because they want to make money fast. But you can't make money fast because you have to have the experience to make the money. That's the catch-22, isn't it? It's all psychology. I had the chance to make 15% on the yen intervention on a month where I was already up 15%. I ended up then 10% down that month. Yeah. This month, still chasing the yen to get some back. I mean, this is what I said. I posted in the Telegram group today, didn't I? I mean, if you go back and look at the beginning of this month, I was in over 9% drawdown. I've done nothing different with any of these trades that I did with the trades that got me into 9% drawdown. It's just that the strategy conditions were not correct for the strategy. And that's what I was saying in the Telegram group, quite a long post in Telegram today about it. This job is not about finding a system or a strategy that works in a market. It's about finding a system or a strategy that is consistently able to extract money from market movement. Markets will go up and down. They will go up and they will continue to go up, or they will go down and continue to go down, or they will go up and down. Yeah. It can only be trending or ranging. There is only two market conditions. it's going up and it keeps going up, or it doesn't. Those are the only two things. It spends 80% of its time doing this. So your strategy for extracting money out of market movement should be based on movement up and down. When it moves up and it continues to move up in a trend, strategy doesn't work. If it's a parabolic trend, squeeze, the strategy doesn't work. If, like the US dollar CAD, the strategy, I call it a strategy, the methodology of position trading. If it's the US dollar CAD, it cannot fail to make money. It's impossible for you not to make money in any ranging market. The market spends 80% of its time range bound. Yeah. So that's what we do. We wait for the market to move up and down. That is the job. Extracting money from the market moving up and down at random. There is no system, strategy, or indicator on the planet that knows where this is going. And this is what somebody was saying. I'm going to pick the right, the instruments with the lowest drawdown and the highest profitability, and I'm going to get rid of the rest. And my answer was, which ones are they then? Because if you use the ones that in the last year have been profitable and have had the lowest drawdown, what makes you think they're going to do that this year? Yeah, this is why you backtest over a period of 10 years. If you've got a system or strategy that over a period of 10 years, when the market has been ranging, expanding, trending, and in contraction, if you test over all four of those and it comes out at the end in a profit, it's a robust strategy or robust way of extracting money from market movement, regardless of the condition. But the market condition this year that we haven't seen could be that, or that. But no one on the planet knows what that is. So how can you formulate a strategy for it when you don't know what it is? So it's got to be something or way of money or way of extracting money out of a market that is completely random and unpredictable. That's what position trading is, or DCAing, as the banks and the institutions call it. Yeah. If something goes up and down, you will never pick the top. You will never pick the bottom. But as long as it does that, you can pick something out of it, but you'll never know where to pick it. You'll never know when to pick it. So you need something to tell you that something's done something, which is what the condition indicator is. You then need something to tell you that the market is going in the way you want it to, which is what the signal indicator is. You combine that with that and you get in. But what happens after that is totally random. You just wait. All you can do. That is it. And, you know, you get instruments like that. Where you got something that basically screams up like that. Yeah. You still have a chance if you're going like that and it does that of getting out when that happens. You've just got to get that right. But you will never know. And sometimes it goes so far you just physically can't. And you take a loss. But look at the number of times it does that compared to the number of times it doesn't, and you'll find roughly 80% of the time it doesn't go parabolic. Just does that. And even when it's doing that up and down, isn't it? That's what position trading is all about. Getting it wrong and eventually getting it right. But you're going to take heat. And there's no prop firm on the world that's going to let you trade like that. Why? Because that's how you trade. That's how all traders trade. You can use stop losses, but if you use a stop loss, you know, this is a prime example, this euro pound here. Look, I'm using a very similar strategy to position trading. Yeah. Not a great instrument as an example, but yeah, I've got stops on this. So if this pushes down now and stops me out and then pushes up and hits that TP, I make money. If it does that and that, I make more money. If it does that, I lose twice. I don't know what it's going to do. The only thing I have at my disposal is risk. Market movement is random. Yeah. The reason I got into this trade is because there was a line going down, which went over a line, which I selected, and then I bought it. Yeah. That is completely random. The movement after it is completely random. That is trading. Yeah. You can look for the strategy that works in the past as much as you like, but the condition that caused that and this, and then what happened after it, is unique and will never be repeated. Yeah, this is what I say. You can't find a system or strategy that is going to work all the time because it can't. Look at this, pound yen, right now. Beautiful, $600 of profit. Should I shut this now or should I let it go down there? Who knows the right answer? Anybody? I don't. Do I need $600 now? The question is going to be, am I $600 away from target, or do I need more money to pass my evaluation? At the moment, I need more money. So the answer is leave it. If I was $600 away from my evaluation target, the answer would be take it. Yeah. The system or strategy has got nothing to do with whether or not that becomes a profitable trade. If the yen tomorrow increases its interest rate and everybody buys it, I make 2.5K. If they sell it, I lose a K. I have no control. Random. Yeah. I could take that now and put it down there and make this a £1,500 profit day, or not. But who knows what is right to do? Nobody. This is why this job is so hard. There is no answer to this question. Everybody will have a different opinion. The reason I'm targeting that level is purely because that's where they bought it last time. So if it pushes down, they might do that again. They might not. I don't know. All I do know is I've seen support and resistance work 1,000 times in the past. So I will bet on it working again. I might be right. I might be wrong. I have no idea. All a backtest is going to tell you is what's happened in the past. What's going to happen tomorrow morning, unless you've got a crystal ball like John Wick, you don't know. Up and down. It's all you've got. Up, down, risk. There is nothing else. You just need a methodology and a strategy to apply to the up-down movement. Consistent, transparent, and doesn't try to sell you anything. Everybody buy my indicators and EAs. No, I don't. Have you done a video yet on strategy testing on MT4? No. No, I keep getting asked, and there's so many videos out there about it. I don't really have a anything particularly I can say that nobody else has said. If you want to learn system parameter permutation testing, there's a guy called Stat Oasis, who's very, very good at explaining what testing should involve. He's on YouTube, but he will try and sell you a course. So be warned. He has a paid service. He sells courses. It's all about making money, basically. But there's what you want to learn is the bit about system parameter permutation. Yeah, there you go. Oh, there you go. That's probably the best video. Go and watch that. SPP is the absolute most important thing in backtesting, system parameter permutation testing, proving that a strategy, no matter whether it goes above where I wanted to get in, below where I wanted to get in, and if my target isn't hit and it's just missed, or it overshoots my target, if the spread is a little bit more than I wanted, my slippage is too much, my commissions are more than I was expecting. If you test your strategy with all the different variations of system parameter permutations available, i.e. the variances, and it still makes money with all those variances, it's robust. If it's robust, it's got a chance of working in the future. That's all you can ever hope for. Everybody says, what's the best set file for the position trader EA, the market reverse alerts EA, the stock index hedge EA? Which is the best one to do? Which is the best to use? I have no idea. What's today going to do? If you told me today that the S&P would be a clean break to 4R, I would have told you the best set file to use is a 4R TP1 with a, I don't know what the trading stop should be yet, but let's say a 2R trailer. I took a 1R, 3R. But today, you should have taken a 4R. I don't know how far it's going to go down, but maybe a 6R as a second. But how can I answer the question as to what the best settings are when every day is different? But what I can tell you is I've tested thousands of system parameter permutation tests over a decade, or not over a decade, over 5 years with this, with all of the settings, different offsets, different targets, different trailers. I've tested them all, and more than 65% of them came out as profitable, which is enough. It's enough to say there's a good chance that any of those will work in the future, but every single day you don't know which one it's going to be. Where's the support and resistance? Is the propulsion gap going to hold? Is it going to gap fill? Will it come down to support? One of those things will happen. Crystal ball or guess. That's all that's all you've got. Picking the best instruments parameters from a back test is defined as curve. Yes, curve fitting. Yeah. And again, the bell curve, I've explained about the bell curve before. So when you get an SPP test, let's say you test 10,000 permutations of a strategy. If 8,000 of those permutations come out as profitable, you've got a pretty robust strategy there. Of those 8,000, you will find that 20% of them are really profitable. 20% of them are really not profitable. And there'll be a chunk of 60% in the middle, yeah, that are mediocre. These are less likely to happen in the future than this. And I always draw this, and it always looks like something. Somebody always comments, but that is a bell curve. And basically, if you take a system parameter from the middle of the bell curve, the chances of it being reproduced in the future are above 50%. Therefore, you have an edge. But you do not know which of the 8,000 you should pick next year. You have to pick one. Yeah. So, the testing that I'm doing at the moment for my mate's strategy, I'm doing 16,000 tests per instrument. Of those 16,000, when I get 12,500 results back, I don't know which ones to use because there's 12,500 out of 16,000 that make money. Which one next year is going to be the one? I don't know, but one of them, pick one. Is there one that seems to make money at an average level across all 28 Forex pairs? That's the one. Is it the best one? I don't know. All you can do is show a profit curve of what happened in the last 10 years. But next year, it will be live trading and the P&L will not be the same. That's what back testing is about. And that is what the optimizer is. So in your strategy tester, when you go in and you pick your EA, you use the optimization, and that's it. So you run an optimization using different system parameter permutations, and that is basically the test. That's all you do in the tester. And you see what comes out the other end. Afternoon from Pontevedra. Today under the clouds. Yeah. Forecast for the UK is rain, rain, rain for the next week. I've got a fire pit coming at the weekend as well. For the garden. That's going to get used. I've also got a window cleaning pole coming as well. I've been really busy this week buying stuff on Amazon. So I've got a fire pit and a window cleaning pole. Yeah, I pay my window cleaner £20 a month to come and clean my windows. Do you know how much the extendable window cleaning pole that actually shoots water out at the top is? 85 quid. In 4 months, I will have paid for the piece of equipment, and it takes 10 minutes to clean the windows. Economics. Afternoon, Freeman. Right, that's all I've got for you today. So 2 clean breaks. I'm not sure if that would have been a clean break. I think it probably would have been if you'd have traded the NASDAQ. But yeah, nice profit today. DAX was a beautiful break this morning as well. So indices, very nice at the moment. They are really picking up and the volume is coming in at the open. So fantastic. So everything else, basically, we're just waiting for the yen. So we are getting some serious movement in the US. No, is that the euro collapsing? Euro coming down. I should have taken that today. That propulsion gap's looking like it might hold. We'll give it to the end of the day. Swiss franc really rallying as well. Euro CAD just hit ADR as well. So 2 ADRs today. 3 ADRs, all the euros. Euro yen as well. Euro getting hit. No news. Just market movement. So we'll see what happens with this euro, but really looking like I should have taken profit on that euro pound this morning, which is a pain, but we'll see. So yeah, we'll see what happens tomorrow morning. So I'll be back on tomorrow at 8 o'clock. 7:45 actually, sorry, 7:45 tomorrow morning. I'm going to trade the DAX and the FTSE live at the open at 8 o'clock. And we'll obviously do an analysis of what's gone on this week, but more importantly, we'll be looking at the Bank of Japan rate and see what comes out of that press conference. And tomorrow afternoon, the only news we've got is Michigan. So market may well move on that tomorrow afternoon, but it's basically BOJ stuff tomorrow. So we'll wake up and see what's happened with the yen. If you've got yen profit on, they are buying it at the moment, look. Yeah, so you might find you get a bit of a rally overnight on this ahead of the news, but good luck if you're in it. I am late, but just read that. Yes, you are late. Schedule's on the website. Right, so I'll be back tomorrow, 7:45 tomorrow morning. We'll have a look at everything. If you can't make it, obviously you can watch the replay, which will be out straight afterwards. Hopefully you've made some money today. And yeah, we'll see how we go. But yeah, all about the yen tomorrow. So keep your eyes peeled on that one tomorrow morning. All right, have a good day. Anything you need, let me know in Telegram or Discord. Other than that, I will see you guys next time. Have a good one.